Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I'm going to answer a lot of your guys' questions so everybody gets my response. Sometimes I do these videos and some people like them. So here we go. I read through a whole bunch. I stopped on this one. Can you explain why Dr. Burry is not buying gold/commodities even though he's forecasting hyperinflation? So what he's done, and maybe he has different instruments where he can make more money, is he's going short bonds. Basically, he's betting that interest rates are going to go up. It's the same bet that I'm making. I'm just going into commodities. I think what he thinks, and there is some validity to it, is that the government has the ability to hold down the price of gold or to not allow it to go up. In my opinion, that is the wrong opinion. What's going to happen, and here this is my opinion, and you know, take it for what it's worth, and I'm fine with disagreeing with a lot of people on YouTube like Kathy Wood and Michael Burry and all these guys. I don't think they can hold gold prices down. The reason being is, and I don't think they can hold commodities down. I don't think they can hold interest rates down. I don't think they can hold anything. I think that they're going to be the tail on the dog, not the dog wagging the tail. And the reason I think that is when these market conditions present themselves and people start figuring this out, the government has no money. The Federal Reserve only has what it prints. It's in the hands of everyone else. Everyone else has the existing money that's in the system. And the velocity flow as well could get kicked up. So what happens then is if people get scared, and this is all they're going to do is they're going to flap their jaw. They're going to flap their jaw all like this and try to convince you and everyone else of how to think. They're going to say, you should think this, you should think this, and they say it over and over. It is transitory. It is transitory. It is transitory. Oh, and then at night, you'll wake up and you'll be like, it's transitory. It is transitory. And then, no, it's not transitory. This inflation's not transitory. The gateway is what I've been talking about, money flooding into the system through residential real estate. And they're doing a whole bunch of other stuff, jacking around with a bunch of things. I don't even think that they're really holding interest rates down too much. They're probably holding it a little bit, but they're jawboning it down. They're talking. I think that they have less control. I mean, I know they're out there buying the short end of the curve so it doesn't invert and give us all these signals. But I think they're trying to jawbone it down, trying to convince everybody that it's transitory. And then once people figure that it's not transitory, they're going to be in a world of hurt. They're going to have a problem on their hands. They're going to be backed into a corner going, do we sacrifice the dollar or do we keep the dollar so we can continue our control over everyone with the dollar? And that's where their power and control comes from, is that dollar. And then they've got a military that backs the dollar. So if you disagree and you're in the Middle East, we'll just put our military there and take you out. You know, maybe Saddam Hussein or Gaddafi or someone who wants to transact oil and gold and doesn't want to use the dollar's currency. So my opinion is that they don't have control over any of this stuff. The market's going to force it, and other governments are going to vote with dollars. So the way that a lot of these countries manipulate their currencies is that they recycle their money back into bonds. Now, what happens in some of these is they stop recycling it because they're not getting a return. They're losing money buying bonds in a real negative interest rate environment. So what do? They go and acquire commodities. Hey, look, we have this Chinese boom, commodity boom, because they're buying all these things. Well, they're buying it because they have nowhere else to put their money. They can't go and buy bonds. They're going to lose their butt on them. So what they do is they go acquire real hard assets. They buy gold, they buy silver, they buy copper, they buy all sorts of commodities. And that's where all that demand comes from. It's the rotation of money. It's bigger than what I've even described. Because countries will sit back and they'll say, I don't want to buy bonds if I'm going to, lose my butt here. I'm going to go buy a bunch of hard assets. And then they call it a Chinese commodity boom or They call it whatever because China's buying all these things, and all they're doing is filling back their reserves. Their stockpiles of whatever they have. And they're probably going to try to keep this stuff down as long as they can, just countries in general, so they can acquire more at the bottom. So people don't get all afraid and run into stuff. But it's good to be early, I can tell you that. Looking through some of the oil companies I like Centennial Development, CDEV, SM Energy, and RECAF, RECAF. That's probably the most riskiest one, RECAF. It's an exploration company. They could be sitting on a very large find, and I continue to pile into it. It says, I think uranium is in the don't chase phase now, at least if you have some positions in it. On the other hand, tin, copper, nickel diversified miners may exhibit buy points. BHP has corrected some. Rio Tinto might, since they got slapped into developing a new copper mine. I think you could go through some base metal companies now, both diversified as well as specific, as a suggestion soon for 10,000 for the channel. So anything that's down, like precious metals right now, some of these royalty companies, Nova Royalty, Sandstorm Gold, Teuton Resources, I'm buying them. I would be a buyer here. They are down, and you buy stuff when people aren't looking at it. That's how I make my money. And those are the ones that I am buying, and I was buying uranium back some weeks ago. I was letting everybody know that. And that's where I would be buying, yeah. And the diversified miners, I haven't seen a bottom put on it. Copper looks like it's firming up. Copper needs to break its little downtrend here, which I think it might. Let's monitor it, and I like to buy into that strength. So they've pulled back. I like to see things pull back up into strength, breaking down trends. Silver's one that looks very good right now. Some of these silver companies, I like physical. So, I mean, I'm not so big on some of these mining companies. I'd rather buy royalty companies. And why is that? I think oil could go berserk very soon to the upside. I am a huge oil and uranium and just in general energy bull. Anything in energy, I think it's going to go vastly higher. They're messing around with everything. That means that the price of energy is going to go up. If the price of energy goes up, where can you make money, and where is it going to be? What industries and sectors are going to hurt because of higher energy prices? Basically, anything that's an assembler of products, something higher up on the vertical integration side. So all those companies that are in the S&P 500, they're going to probably eat it. And then you've got, in terms of mining companies, energy is one of their input costs. So the mining companies may or may not do that well if energy rockets higher here. Because remember, that's a twofold play in a mining company. It's the mining company extracting a metal that's going up, but if your energy costs are going up faster, their margins may be getting pinched. So I'm looking at all this stuff and saying I'm overweight in energy right now because it was so cheap. I have a lot of oil, a lot of uranium. I'm pretty big in it. I do have a lot of royalty companies. I've been thinking this through quite well because the royalty companies protect me from the increasing increasing energy prices. The royalty companies are based off volume and price. So if we get higher prices and the volumes stay roughly the same, I make a bunch of money. The royalty companies are a great way to play it. It's leverage without input costs. And that's why I hold so much of the royalty companies. I'm dumping in them. Now, the physical metal side, I also think is going to be incredibly good. I think it could even maybe outperform a lot of the mining companies itself. So I want to make sure, I own a huge physical holdings. I own a lot of royalty companies. I own little mining, and I own a lot of energy. That's kind of, if you want to wrap your head around it, that's my play. That's how I'm positioned and my strategy. You can disagree with it, but I do own some mining companies. They're not a ton. I own Discovery Silver, EXK, some of these silver mining companies I do own, but I own a lot in the royalties. So that's that there. Netherlands. How do you buy physical platinum? Can you get this on TD Ameritrade? You can buy a physical platinum trust. SPPP is palladium and platinum trust. So that's the Sprott physical palladium platinum, SPPP. And then there's the other one, PPLT is another one that you could buy if you want to buy it in that. The other one that I would do is literally buying the physical metal. And I would buy, I've got other videos on this. If you want to look at them, check them out. I buy Valcambi bars, Arger Heraeus, Pamp Swiss, and I just buy 1 ounce bars or whatever size you want, bigger or smaller, doesn't matter. And I like the physical because it's out of the system. Sorry. It's out of the system. They don't know you own it. It's hard to tax. So that's where I would, that's what I would do, is physical. Sorry, guys. Is it still time to get Batterman? Yeah. It's cheap. Uranium's cheap. Batterman's cheap. I think it's still okay. I would cost average in. I wouldn't go all in one shot because you could see a pullback. Again, when it gets this volatile, it's very hard to tell. But man, it's still a good deal. Always amazing content. We'll love a video about food commodities. I don't know as much about food commodities. I know that the growing seasons are more rapid and they can adjust supply and demand a little bit quicker. So I would rather play the fertilizer companies, Mosaic and Intrepid Potash. Those are the two that I own. Diamonds, Potash. Well, yeah, someone pretty much there. Platinum. Yeah, platinum's one of my favorite physical metals. It says, so what happens when the sugar high from the sprint in the accumulation is over in the uranium sector? A sell-off until it finds new support. I'm wrestling with when to trim some to hold in cash to buy on the next pullback bottom. Surely Andy's not selling a thing, only buying. So when I look at things that have gone up that fast, I don't chase it. I'm pretty patient, and I've bought a lot when it was cheap, and the valuations in uranium are still incredibly cheap. So I'm not selling anything. I don't see a reason to sell something. What am I going to go into? I'm already buying everything I can of everything that I think is the best deals. And these prices are so cheap and the valuations are so low that I see no reason to sell anything. I hold on, and if you guys get afraid, you can put things into a free ride, which means you sell your original money and everything is free to go. So there is that if you want to, but I don't see any reason to sell because everything's so cheap. So that's my take on it. Are you fearful that a lot of your junior uranium miners are going to dilute the share value with the issue of new shares or reverse stock splits to raise more capital? Anything's possible, guys. Anything's possible. If you want to lower your risk of that, you buy a royalty company. Usually, they don't dilute shares, and if they do, it's not really a dilution. They're going to raise money to buy a lot more value-adding royalties. So usually it goes to value-added stuff or activities if they do raise money. So it's not really a dilution. A dilution is when they raise money to fund their operations or fund a mine or something like that. So you're probably going to see a couple. Yes. I don't know who. You'd have to look at how much money they've got. Or if they're going to be buying out other companies, they may dilute that way. But that's also raising value for the company. So I'll stop it there. Thanks for the comments, everyone. I really appreciate all your comments. I think that you guys are, if you can stick around the channel, subscribe to it. If you can learn a lot, I think you'll become a lot better of an investor learning from this channel. I think we've got a bunch of good people that are leaving comments. I don't see too much garbage in the comment section. So, good job there as well. Way to keep it pretty classy. And, everything seems pretty good as long as people are making money, right? It's when things pull back and consolidate where people get a little bit frustrated. And that's usually where you want to be the biggest buyer. So usually emotionally, when you feel the best is usually when you want to buy the least. And when you feel the worst, well, that's when you want to really pile into it. If you're a new investor and you're not trained to look at these markets in a certain way. If you guys like this content, give me a thumbs up, subscribe to the channel, and thanks for listening. This is Finding Value.